In our today's video we are going to learn how to find correct value of business. So let's go. Determining the correct value of a business is a complex process that involves considering various financial and non-financial factors. Here are some common methods used to find the value of a business. 1. Financial statements analysis. Analyze the business's financial statements, including the income statement, balance sheet, and cash flow statement. Look at revenue trends, profit margins, and cash flow patterns to assess the company's financial health. 2. Asset valuation. Determine the value of the business's tangible and intangible assets, such as property, equipment, inventory, and intellectual property. Subtract liabilities to calculate the net asset value. 3. Earnings multiplier. Calculate the business's earnings before interest, taxes, depreciation, and amortization, EBITDA. Apply an earnings multiplier, based on industry standards, to assess the company's value based on its earnings potential. Asterisk 4. Comparable market analysis. Look at the sales prices of similar businesses in the same industry or market. Compare factors like size, revenue, profitability, and growth rates to estimate the business's value. 5. Discounted cash flow, DCF, analysis. Forecast the business's future cash flows and discount them back to present value using an appropriate discount rate. DCF analysis helps assess the business's intrinsic value based on its ability to generate cash in the future. 6. Business valuation experts. Engage a professional business appraiser or valuation expert. They have the expertise and experience to consider all relevant factors and apply the appropriate valuation methods. 7. Market capitalization. For publicly traded companies, the market capitalization, number of outstanding shares multiplied by the share price, represents the current value of the business as perceived by the market. 8. Industry and market conditions. Consider the overall industry and market conditions. A company's value can be influenced by the demand and supply dynamics of its products or services. 9. Growth potential. Assess the business's growth potential and prospects for expansion. A company with strong growth prospects may have a higher value. 10. Intangible factors. Take into account intangible factors, such as the quality of the management team, brand reputation, customer loyalty, and competitive advantages. Remember that business valuation is not an exact science, and different methods may yield different results. It is essential to consider a combination of valuation techniques and seek professional advice, especially for complex business valuations. Additionally, the value of a business can vary depending on the purpose of the valuation, such as for selling the business, seeking investors, or estate planning. If you learned something valuable from this video, make sure to press the like button and hit that subscribe button.